All right, let's get straight to it. That rally you saw in Korea, it's a complete illusion. You need to ignore that green index because underneath, a massive negative 1.28 trillion won foreign sell-off just fractured the entire ownership structure. And that right there is a direct threat to the US Tech Open tonight.
So let's break this down. This is the central contradiction we're looking at. On the surface, yeah, the KOSPI looks great, right? Closing up over 1.5%. But you dig a little deeper and you see that foreign capital pulled off a huge structural liquidation. This isn't just random market noise, people. This is the signal. This defines the risk for tonight's session.
So what's our job here? We have to deconstruct this apparent strength. We need to slice right through it and separate what's just mechanical price movement, the noise, from what really matters, genuine investor conviction. That's the signal we're hunting for. And look, this selling, it wasn't some random risk-off panic across the board. No way. This was a surgical strike. This capital exodus was laser-focused, aimed directly at the heart of Korea's tech sector. We're talking Samsung and SK Hynix, the absolute core of the global semiconductor supply chain. So that leads us to the big question, right? A $1 trillion sell-off in tech heavyweights like that. I mean, that should have absolutely cratered the index. But it didn't even flinch. The selling pressure was absorbed, but it wasn't defeated. So the question is, how? Well, the answer lies in a fascinating mechanism. We call it the basis defense. And it's all about how derivatives can create a kind of synthetic, an artificial floor under the entire market, completely masking what's really going on underneath. Okay, so let's get into what this actually is. The basis defense kicks in when futures prices start trading consistently higher than the actual stocks themselves. Think of it like a price gap, this positive spread. And when that happens, it creates a risk-free trade, an arbitrage opportunity. So what happens? Automated programs jump in. They're programmed to buy the cheaper stocks and sell the more expensive futures, pocketing the difference. And the result? All that massive selling pressure just gets soaked up by machines, all while genuine investor conviction hasn't changed one bit.
And the data confirms the entire operation. It's all right here. Foreign players dumped negative 1.28 trillion in the regular stock market. At the exact same time, they bought up 1.41 trillion in futures. And who bought all those stocks they were selling? Domestic institutions. They stepped in and bought positive 2.32 trillion worth, and it was all funded by this derivative setup. It's a perfect closed loop.
And what was the trigger for all of this? It came down to this one number, an average basis spread of positive 2.43 points. That very specific spread is what activated over 455 billion won in automated program buying. And that, right there, is what single-handedly defended the index against that massive foreign exit.
So this brings us to our final verdict for the Korean session. What we just witnessed was a complete and total decoupling of price from actual ownership. The index, it looks healthy, sure, but it's an illusion. It's a house of cards built on a dangerously weak ownership structure.
And you don't have to take my word for it. Here's the visual proof. The KSOPI chart, it's all green. Looks great. But then you look at the market heat map and you see the biggest engine of the whole index, Samsung, just bleeding red. It's like the engine was sputtering and dying, but the check engine light on the dashboard was still green. And the internal data just hammers home how fragile this all is. You had Samsung down with a ton of short selling pressure. SK Hynix, okay, it managed a tiny gain, but it was also fighting against a huge wave of shorts. And all the while, the volatility index, the KOSPI, was hovering near 25. That's a huge red flag for elevated risk and fear in the market.
The core principle here, what this whole analysis has really uncovered, is simple. When you see price stability get disconnected from real ownership, the market is fragile, full stop. The price held up, yeah, but the real owners, the people with actual long-term conviction, they were heading for the exits. Okay, so now let's pivot. Let's translate this signal for the US Open. What does this mechanical trap we just saw in Korea actually mean for the Nasdaq tonight?
It sets up our #1 job for the session ahead, our primary verification task. We have to figure out if the Nasdaq strength is real, if it's being supported by genuine spot demand, real people buying stock, or if it's also just being propped up by these derivative structures just like we saw with the KOSPI. That is the critical question for tonight.
All right, analysis complete. Switching to command mode.
Here is the Nasdaq battle plan. Listen up. Key levels and execution protocol. Watch 24150. This is your reclaim threshold. A sustained move above confirms a shift to offense. Defend 24,000. This is your critical support. A break below on a 15-minute close means you reduce risk immediately. Invalidate longs below 23,850. This is the line. Below it, cash becomes your position. Period. Final checklist. Asset, Nasdaq 100. Condition, confirm 24,000 support on a 15-minute candle. Action, prioritize sectors with confirmed order backlogs. Think infrastructure, defense. Risk, implement a 1.5% trailing stop. Do not get caught in volatility traps. Log your result at 0630 EST. No exceptions. You want the Asia close before New York opens? You need to be here. Subscribe.